All right, profits are still the mother's milk of stocks. You saw it this week, and we have another big earnings week coming up. Here now is CNBC contributor and syndicated columnist Jerry Bowyer. We also have Bill Smead, if I have that right, CEO of Smead Capital Management. And we have Carl Denninger, who runs the Market Ticker blog. All right, this is good stuff. We've heard some optimism tonight. Carl, you're not, though. You are not. I was reading your blog. Give us a little hint here. Give us a teaser.
Well, my basic viewpoint is that when it comes down to whether or not you're going to have profits, you have to look at the income statement first. And when you look at revenues, what you see isn't bullish at all. We've got Harley-Davidson, for example, 30% down on shipments. We have the automakers all going from 14 million units to about 10 million units a year. That's about a 30% decrease. We had RevPAR from Marriott down about 19%. We had GE's revenue down 17-18%. And the same story keeps getting told. We're in the high teens, low 20s, 30% decrease on revenue. What you're seeing is profits from operating efficiency. And how do you get operating efficiency? You offshore and you fire people. That's great for the bottom line, but it isn't any good for America on whole.
All right, it's a fair point. Would you be a seller in the stock market, by the way, just real quick?
I think it's time to get very short. This rally is absolutely unsustainable and unsupportable on the fundamentals.
Right. Bill Smead, you're on the other side of this trade, are you not?
Yes, we are. Larry, at the start of this year, we felt that this year was going to be a lot like 1988, where you came in, investors were traumatized from the crash of '87. The market really made life difficult on everybody with sharp downswings and sharp upswings, and you ended up the year with about a 10% gain, virtually no one happy. Long's not happy because 10% wasn't enough to get back the crash money. Short's not happy because they didn't make any money. And then in 1989, the market went up 25 to 30%. There's no reason in our mind that that's not going to happen. The thing that your other guest is forgetting is that all these are year-to-year comparisons. You're looking at what General Electric did this year compared to the prior year. Wait until the reset is over on October 1st, and you start comparing sales with the coma of the fourth quarter last year, and sales are going to look an awful lot better at that point.
What's your favorite sector right now? What's your favorite sector right now? Just to complete the loop, and then I got to get to Jerry Bowyer. What's your absolute favorite investment here?
We think the drug companies are going to be
drug companies.
Fantastic.
They may be nationalized in the next 90 days. Are you sure?
They're going to make so much money. Wall Street Journal article last week. $100 billion increase in sales over the next 5 years in emerging market nations, and all that business is controlled by about 10 or 12 companies.
All right, well, that's right. Interesting. Jerry Bowyer, who's right and who's wrong in this debate?
By the way, I'd stay away from anything the government's going to try to fix, so I'd be concerned about pharmaceutical companies. I think we have. I don't think we have 35% ahead of us, but I think we've got better than the kind of doom and gloom scenario that was just laid out there. I mean, look, we don't have revenues plunging in the teens for companies across the board. We have some bad performers for whom revenues are plunging in the teens. Larry, you and I spent basically the first half of this year making one fundamental argument, that if retail sales fall a little and commodity prices and payroll and interest fall a lot, that revenues down a little, expenses down a lot means increasing profits. And that's exactly what the profit reports that are coming out now show has happened.
I agree with that. By the way, let me just put, I think we have these charts. Unemployment claims is such an important leading indicator of jobs and consumer spending and incomes. There it is. The weekly jobless claims have come down now quite a bit, from about 680,000 to about 580,000. We had two big drops this week.
Larry?
Jerry, if those numbers hold, I just want to make this point. If those numbers hold, some people think that's bad seasonals, didn't count the automobile layoffs properly. But if those numbers hold, then the recession is over. We're going to talk about the recession later. But that's the best thing I saw. And the second chart that's worth noting is we've seen a bottom, surely, in housing construction, housing starts. That came out today. Right. We've seen 4 months, so that's bottoming. So, Jerry, what about this unemployment
claims number? The unemployment claims number, that jives with what we've seen in the Challenger Gray Christmas survey of layoffs, and it jives with what we've seen in the JOLTS report, which is we're really not firing people anymore. We're not hiring them either, but the chainsaw firing days are over. We did all the firing we needed to do last year and the beginning of this year, and now we're rolling along with a stable workforce that's becoming more productive.
But Larry, from a stock market standpoint, Larry, from a stock market standpoint, there's still more cash on the sidelines relative to Wilshire 5000 and relative to S&P capitalization than there was at the bottom in 74 and the bottom in 82, even though we've already come up quite a ways off the original bottom. So
it can go to bonds, it can go overseas.
No.
It doesn't have to go in equities.
Hang on, Carl. Carl, would you sell GE? Would you sell banks? Would you short the S&P itself right now, Carl?
GE's too late to sell. They're already in the toilet. As far as being short the S&P, yes, I shorted it hard at the close today.
Oh, you did,
and
at the close. Right.
And the reason is this. You have a credit recession that was caused by too much debt being throughout the economy, in banks, in consumers, in businesses, everywhere. Consumers have managed to take $60 billion out of a $1 trillion between secured and unsecured debt, not including mortgages, off their balance sheet since the peak, which was just a few months ago. That's less than 6%, and you're telling me that's enough deleveraging for the consumer?
Would you
Not a chance,
would
Larry.
you go
Only if that was the problem in the first place.
What
but
about
if that wasn't the problem, I'm sorry, I don't mean to interrupt.
Go ahead, Jerry. Go ahead.
How did we go bank? How did we have all these bankruptcies in the first place?
If that was not the problem in the first place, if bad Fed policy was the problem in the first place, then we don't need to deleverage $1 trillion. We just need to let the liquidity do its job.
Jerry, 13% credit card delinquencies.
Let the reset happen. No one was borrowing money in the last 12 months as we went into a coma. Nobody borrowed any money in October, November, December last year. So if you're comparing an economy where nobody borrowed money one year and nobody borrowed money the next year, what you're going to have is somebody buying more than the year before. It's a much more favorable economy without the leverage, without the borrowing, and the strong companies end up with the business from the people
Bill, let me ask you, apart from just the cash flow analysis, after a week like this, okay, this is a great week, and as I said at the opening of the program, let's not look a gift horse in the mouth. Stocks were bullish. America was bullish this week. It's wonderful stuff. After a week like this, an investor has, what, two choices here? Put more chips in, or take some chips off the table. What do you recommend?
Well, first of all, 80% of the individuals are not participating. They're out. So all
what does that mean? What does that mean? They're in cash on the sidelines?
The market is completely dominated by professionals right now, and many of those professionals are both long and short.
The market's dominated by computers right now.
That's right, and the public won't come back in until we get that next leg up of 30 or 35%.
Hey, Jerry,
what if you just saw it?
All right, good point. Jerry Bowyer on the way out. President Obama gave really a frenetic press conference this afternoon, desperately trying to rescue the health care plan, which is sinking. Now, Jerry, I have this peculiar view. That health care plan, which is one of the worst pieces of policy on taxes and spending and borrowing and central planning, the public hates it, Jerry. If it goes down to defeat, this could be extremely
very bullish. And if it doesn't go, as long as that's hanging out there, we are going to have high unemployment. No one will hire in the environment where that threat is hanging out there like the sword of Damocles.
All right, but if it goes down, it's one of these litmus test turning point things. From the standpoint of politics and the economy, I'm trying to draw them together.
Then jobs boom. Then jobs will boom if that goes down.
And we're going to have Dow 12,000. I don't know.
Yeah.
Jerry Bowyer, thank you. Bill Smith, thank you. Carl Denninger, thank you. You're right, Carl. GE numbers were really lousy today. There's no way around that. Coming up, folks, is the recession really over? The only word Peter Schiff seems to like is better than recession is depression. That may be unfair, but that's what people are saying. Luckily, we have Peter Marisi, who's much more bullish. He's calling this the decade of stocks. A pleasant thought. We are going to hear Peter and Peter go at it afterwards. And later, is Goldman Sachs really about to acquire the Treasury Department? I'm a little tongue-in-cheek here, folks, but I want to give you an update on this very important story. And right now, speaking of updates, let's check in with my great pal Dennis Neal, see what he's cooking up for the top of the hour. Hello, Dennis.
Hey, Larry. First of all, yes, the recession is over. Second of all, stocks up 7% this week. Should you sell? I think no. And also, Obama's desperate plea on his health care plan. And Goldman, JPM, the Democratic liberals are just outraged that they're profitable. But isn't this what we should want?
Do you see Paul Krugman? Paul Krugman's attacking Goldman Sachs, huh? The last resort of scoundrels. I love it.
What a surprise.
All right, buddy. Have a great program, everybody. 8 p.m. The Kudlow Report. We'll be right back.